Okay, good morning. If you can hear me, can you type in the chat and just say yes so I know that we are transmitting? Fantastic. Okay, great. Well, welcome to today's webinar, Your Credit Report, How It Affects Your Ability to Purchase a Home and Your Pocketbook. I'm Valarie Swanson. I'm a realtor with Century 21 Award right here in San Diego. I'm in the Golden Triangle office in University City. This is actually the second in a series of webinars that we'll be hosting each month throughout the year of 2013. And each webinar is meant to enhance and improve your financial and personal lives. So if there are ever any topics that you'd like me to cover in a future webinar, just let me know. There'll be a survey sent out at the end of the webinar, and I love to have your feedback. Since real estate is such a huge part of our economic environment, I'll just give a brief overview of the current San Diego real estate market at the beginning of each webinar. And then we'll have a guest speaker who will be speaking on a variety of different topics each month. In March, coming up on the 27th, Shirley Guiducci of ERA Accounting Services will be with us discussing the upcoming tax season and changes that everyone should be aware of. And we really appreciate her taking such time with us because this is one of the busiest times of her year. So we're very happy to have her next month. Just a little bit of housekeeping. All the lines have been muted, but we want this to be an interactive discussion. So if you ever have any questions during the webinar, I'll be watching the chat while Dale is speaking. And if you'd like, you can ask to be unmuted so you can have a conversation and ask Dale your questions. Just let us know. Also, if you are on Twitter, you can keep up with the discussion and keep it going, ask your questions afterward and during the webinar by using hashtag SBSWebinar. Okay, so with that, let's get started. The real estate overview, I'll start with that. In San Diego, we are seeing a big increase in sales. Total sold listings in San Diego from last January to this January have increased almost 15% for single-family detached homes and 7.5% for condos. This is a big increase. Obviously, we're seeing a big shift in the real estate market from the last several years. We are also seeing a shift in the pricing. Some economists are saying that the bottom of the market was at the end of 2011, and we started seeing an increase in prices starting in 2012, and now into 2013, we're really seeing that trend continue on as inventory stays low, which I'll mention in a couple minutes. The median sales price here in San Diego from January 2012 to 2013 has increased for condos almost 17%, and then single-family homes nearly 12%. The condos are the big surprise because for a long time the condos remained very flat and very low. So this was a nice surprise to see that the condos are starting to gain value. Much of that probably has to do with affordability, especially for first-time home buyers. So San Diego, with this shift, has moved from what was a buyer's market to the beginning of a seller's market. In San Diego, we are one of the top, we are the top 7th market with the largest drop in inventory. We have dropped more than 50% in inventory. Which means that our houses right now for San Diego, we're roughly about a month and a half of inventory on the market. California is also the top 6 fast-selling markets, which is the percentage of homes sold in 2 weeks or less. San Diego is the 5th fastest with almost 41% of homes. So it's not only a very tight market, but a very swift-moving market as well. Some of the strongest sales neighborhoods in San Diego, Chula Vista, Eastlake area, 137 homes sold in January, just last month. Santee coming up, they're much lower than Chula Vista, although Chula Vista is a much larger area that encompasses the entire Chula Vista East Lake area and all 4 or 5 zip codes that are in there. Santee, 45 homes sold. Northern San Diego, we've got 43 homes in Escondido, another 43 in Fallbrook. Encanto is like the central area of the city, and then Oceanside again to the north, 42 homes sold. Oops, wrong button, I apologize. Sorry about that. Okay, we are back on track. Dale is our speaker today. Dale Guiducci is with ERA Credit Services. I'm going to give you a little brief overview of what Dale has done because he has been in this business for a long time and he is very good at what he does. He is the owner of ERA Credit Services in La Mesa, California, and he represents the most effective credit repair company in the country. They've helped over 160,000 people in the last 10 years improve their credit rating and get into a position to have a solid, sound financial future. Dale has been a guest on local and national radio and frequently speaks to real estate and mortgage professionals on helping clients achieve their dream of home ownership. Dale, are you there? We would love to hear what you have to say.
I am. Can you hear me okay?
I can.
Okay, fantastic. Well, thank you very much. I appreciate, first of all, the opportunity to come on and talk to your clients, your prospective clients. I appreciate the invitation, and I love what you do. I mean, this is fantastic information, you know, for people to be able to come on once a month and get a market update because the market's changing very radically, it seems, from month to month, especially here in San Diego. And then, of course, to have some people come in and talk about some things that otherwise they wouldn't, you know, normally people wouldn't get that kind of information. So yeah, I'm going to talk about credit repair and, you know, how it affects your ability to purchase a home, but how it affects your pocketbook in general, and it affects it very, very dramatically. But I also want to share before I get into the credit repair just how we got involved in the business. I know you introduced Shirley, my wife, Shirley Guiducci. She owns ERA Accounting Services when she's going to be on to speak for you next month. Shirley and I, yes, we own ERA Accounting Services as well, and that business has been growing for years. And part of the reasons for its success is that we've aligned ourselves strategically with professionals in other areas that do things for our clients that we don't do. And that could be things like business insurance or 401k programs, marketing, websites, just whatever our small business clients needed. We wanted to reach out and find some really solid professionals that could provide those needs for our clients. It's helped us with client retention and just overall building our business. Well, about a year ago in January, we sat down and we had a meeting and we decided we needed to find a company that did credit repair because we had a few of our clients that absolutely needed it. And so my project was to go out on a search to find the very best credit repair company in the country that I could find. So I did a tremendous amount of research. It's very, very important for us to, when we do align ourselves with a strategic partner, that is the very best company, not only from the standpoint of price. I mean, obviously price is always an issue, but it's also about quality and integrity and honesty and documentation and all kinds of criteria. And the number one company I found was a company called United Credit Education Services. You can see their logo at the bottom of this slide. And we liked this company so much that we not only started referring our clients as clients, but we became an independent agent for this company. We now represent them, and it's been a great relationship so far with helping our clients and obviously other customers and working with people like Valarie in the real estate industry, mortgage industry, automobile dealerships to help those folks with clients that are having a little bit hard time qualifying or perhaps can qualify but want a better interest rate. So what I'm going to start off and talk about is something that was on television a couple of weeks ago. It was 2 weeks ago, Sunday night. Shirley and I were actually driving back from Las Vegas from a company convention over there, a national convention, and I started getting text about the 60 Minutes report that was appearing at that moment on television. It was all about the credit bureaus. And of course, the big three credit bureaus are Experian, Equifax, and TransUnion. And no, folks, those are not government agencies. Those three companies are privately held, multi-billion-dollar companies. And this 60 Minutes report was in conjunction with an 8-year-old Federal Trade Commission report that had just come out. Now, can you imagine the money we spent as consumers on a 8-year study on the credit bureaus? But that's exactly what happened. And what this report, amongst other bits of information, found is that over 40 million consumer credit reports have errors on them. Now, to put that in perspective, I mean, 40 million is a big, big number. But to put that in perspective, there's 200 million people, American citizens, that have credit reports. I mean, that, you know, if you're over the age of, oh, let's call it 18, and you've done any kind of borrowing or you have a credit card, you have a credit report. There's about 200 million of them. Well, the FTC estimates that over 40 million have errors. That's about a 20% error rate. Well, I don't know about you, but when I had a job and I worked in corporate America, if I made 20% errors, I would have been fired. And that's the big news about the credit bureaus, is they're not doing a very good job. And in fact, Steve Croft, the reporter, found it literally impossible to get an error on a credit report fixed by trying to contact any of the credit bureaus, either online or over the phone. And so people have told me before, well, yeah, I've tried to go online with Experian and try to dispute or challenge something that's on my credit report, and it just didn't work. Well, this is why, right? So there was actually another attorney that came on as well and basically stated that there were, in fact, the credit bureaus were in fact violating the Fair Credit Reporting Act, which is the law overseen by the Federal Trade Commission. We're going to talk about that in just a little bit, that oversees this whole credit reporting process. And they just felt that these credit bureaus were violating the law. And you can actually, I've got the URL there. If you want to go to cbsnews.com and actually look at a bit of that report, you can do that. So big problem is just errors on credit reports. So what you want to do, if you're in the, let's talk a little bit about real estate. If you're in the home buying mode, or you think this year is a great year to buy a home, and I would absolutely agree. If you don't own a home right now, or you want to move up, or even if you want to refi an existing home, this is the year to do it, because interest rates are at the lowest point that they've ever been. They started actually ticking up, my understanding is, here recently. They probably shouldn't go up too much, you know, throughout the year, but they will start going up. And you've got some great prices out there. So if you're interested in buying a home, the very first step you want to take is check your credit report. What you don't want to do is walk into Valerie's office and have her send you over to a lender, or any real estate agent's office. Have them send you over to a lender, have your credit report pulled, and then voila, you've got surprises, right? This happens all the time. I get 2 calls yesterday from Wells Fargo. Both people had gone into, one was a refi, one was a new home purchase, and both people had surprises. They didn't realize that they had what's on their credit report, so they referred them over to me. And both those folks were very, very surprised when the credit report was pulled. So I suggest you pull your own credit report, check for errors, obsolete items, or items you didn't know were on your report. So we know what errors are. Okay, that's just something that shouldn't be there. And errors could be there because of a similar name. It could be there was somebody on the 60-minute report that it wasn't even a similar name. It's just that somehow, data entry-wise, she got all these negative credit items of some other human being that she didn't even know who it was. That happens all the time. The other thing is the obsolete items. What are obsolete items? Those are items that are older than 7 years in most cases, and 10 years on a bankruptcy. So if you have had a ding in your credit before, and it's older than 7 years, well, it's supposed to drop off at the end of 7 years, but there's no magic fairy out there that makes that happen. You, in most cases, have to challenge that with the credit bureaus and make them take that off. So those are obsolete items, and of course, items that you didn't know were on your report. I talk to people all the time where there was a cable bill from 4 years ago when they were moving from one apartment to another or one place to another, and yep, they didn't pay that last cable bill. And there's an $80 bill that, you know, is 4 years old and it's showing up as a negative, and just little things like that that can really drag down your scores. So if you do have items, and the reason why you want to check your credit report first, if you do have items that need to be removed, it takes about 50 days at the minimum, because there's a process that we have to go through this Fair Credit Reporting Act I mentioned before. It's a process of writing letters with the proper legal language and proof of identity to the credit bureaus. The credit bureaus then have to contact the creditors. That's the way this works. You don't challenge directly with the creditors. You go through the credit bureaus. The creditors have 30 days to do their research and respond to your dispute, and then the credit bureau has a certain amount of time to get back to you. So it's about a 50-day turnaround. I know a lot of people out there, they think, in general that it's 30 days. Well, that's just 30 days between the creditor and the credit bureau. It's about a 50-day total turnaround. So if you are thinking about buying a home, it's a minimum 50 days to get something fixed. So check your credit report now. Let's go to work on it. Get it taken care of, because that first dispute letter may not work. We may have to dig in and do more work, and it may take even longer than that. And the other thing is there's a lot of competition, and Valarie, we talked yesterday, would agree with this. There's a lot of competition amongst buyers in the marketplace. So you want to go out in a power position. We're going to talk about power position in just a second. You want to go out there pre-qualified. You don't want to start looking for homes without being qualified, because you're going up against buyers that are qualified and are paying cash. So you want to get in as strong a position as possible. And you want your real estate agent and your mortgage broker to be totally motivated to go to work for you. So again, you want to show strength. Part of showing strength is having a good credit report. So where can you go and get a credit report? Well, the place where you don't want to go is creditkarma.com or freecreditreport.com. In fact, freecreditreport.com is owned by one of the 3 credit bureaus, and you're going to have to pay. You're going to have to pay to get your credit report. Again, the credit bureaus are money-making machines. They have commercials on TV that say free credit report, and you go there and you have to pay for a credit report. So it's kind of a very strange situation, but the place where you can go to get a truly free credit report, or one of the places, is annualcreditreport.com. That is a website that the government, in effect, made the 3 credit bureaus put together, that you can go and request one free credit report from each of the 3 major credit bureaus per year. That's your right as a consumer. So this website has been set up for that. And there are offers on there that you can buy stuff. Don't do it. Okay, just resist. And just go there and pull your Experian report, and then I suggest in a few months pull your Equifax report, and then a few months later pull your TransUnion report, and do that every quarter, every 4 months, so that you're constantly keeping up to date with what's on your credit report. The other place that you can go is you can call Mr. Credit. Now, Mr. Credit is he's a radio show host here in San Diego on AM 1700 between noon and 2 o'clock every single day. I'm very pleased to announce that we are now the provider of credit repair through MrCreditRadio.com, but you can call that phone number, 888-888-0154, and request the truly free credit report that also comes with your FICO score. Okay, so that Mr. Credit Radio has arranged it so people can actually get a free credit report and a FICO score. And I should mention, going back to annualcreditreport.com, you can get your credit report. It'll line out your positive and derogatory credit lines. It won't give you a credit score. So the only place really that I know of where you can get both a free credit report and a free FICO score is on MrCreditRadio.com or 888-888-0154. But do not pay for it. Do not sign up for any kind of monthly fee on Credit Karma or any of those sites. You don't need to do that. So it's really not just about qualifying for a home loan. It's about qualifying for the very best rate that you can. See, I think a lot of people go into the marketplace, especially if they're a first-time home buyer, or if they've had financial issues in the past and now they've dug themselves out and they've gotten in a position to buy a home, and they walk into the lender, whether it be the bank or a mortgage broker, and they just sit there with their fingers crossed and going, I hope I can qualify, I hope I can qualify. And when they do, they're so excited about qualifying, they don't even care what the interest rate is or the points or the program and the PMI and everything that goes along with it, and you end up paying a lot more for a loan just in interest rates and fees than you really have to. So it's not about just qualifying, it's about qualifying for the best rate. And You know, depending on the mortgage broker or the lender that you're talking to, I've heard that as low as 630 as a score is needed just to get in the game. Now, I've also heard 640 and 650 as well. So you need that kind of a credit score to get in the game. But if you do, which again, going back to what I shared with you earlier, you want to pull a credit report. If you do have a 630 and you go, yay, I can qualify, it's not good enough. There's some things on that credit report that are dragging your score down. We need to find out what those are and see what we could do to get them off in a relatively short period of time, 60, 90, 120 days, so that we can get your credit score up far higher than 630, 640, 650. So when you walk in to get a loan, you're going to get a good rate, and you're going to get a good program, and you're going to save a lot of money. So get in a power position. You know, what we need to do, again, is discover why your score is low and then take the steps to increase it to the highest level you can. And here's why. I did this, put some numbers together just so I had some sort of data to show folks as to why it's so important, and it even shocked me when I put the numbers together. If you look at someone that has a 760 score and above, which is generally considered to be a good credit score, and you look at people that are down in that 630, 640 range, and the difference in the interest rate you're going to get, depending on your credit score. Now, this isn't, you know, this is going to vary depending on the lender. It's going to do, you know, this was put together a few months ago, so interest rates have changed. So bear with me here. I didn't put this together this morning. But it's based on a home loan of $400,000 and a 30-year fixed rate here in California. If you look at the 640 to 657 range of a score, or even if let's go down to the bottom, the 620 to 639 range of a score, that same person is going to end up, their monthly payment is going to be about $500 or $600 more a month. Over the course of a year, it's going to be about $4,500 more per year. And over the life of the loan, it's going to be $136,000 more to own the exact same house. Same lawn, you know, same kitchen, same bath, same everything. It's just different credit score, different credit quality. So it's very, very important that we, again, first pull your credit score. Let's get it to the highest interest rate highest credit score we possibly can to get the lowest interest rate we possibly can. And oh, by the way, I did the same kind of study on car loans. So the average car loan in the United States, I believe, is $26,000. I mean, that's what, you know, on a new car anyway. So the difference between owning that car at a 630 or 640 credit score and someone that's at a 760 credit score, the difference in owning that car over a 60-month fixed-rate loan, which is typically what you get on a car, was $9,400. $9,400 difference on that car. So, I mean, look, it's the same car. It drives the same way. You put the gas in, you hit the pedal, and it goes, but you're spending $9,400 over the course of 5 years on the same car. So credit and credit score is extremely important. You want to have the best credit score you possibly can, because now you're in a power position to go in and get approved, save money, have people go to work for you, as opposed to you just, you know, being thankful to God that you could get, you know, you could get a loan. So the Fair Credit Reporting Act is what we work with. It's the law. It's overseen by the Federal Trade Commission. It says that consumers have the right to dispute any item on their credit report to verify accuracy. Now, when it says any item, I mean, what does any item mean? It means absolutely that, any item on your credit report. And if the creditor, again, we dispute through the credit bureaus are then, by law, have to contact the creditor. And if the creditor does not respond to the dispute or chooses not to respond to the dispute, then that item must be deleted, whether it's erroneous or not. So in other words, if someone had a bankruptcy or someone had a foreclosure or someone had a short sale or someone had a repossession, I mean, these things really do happen, and it gets disputed and the creditor doesn't respond, guess what? The item comes off the credit report. Doesn't mean that the item never occurred. You still had that foreclosure, or that person still had that foreclosure, but it's not appearing on your credit report any longer, and your credit score goes up commensurately. Now, what if the creditor does respond? Well, that's where, and oh, by the way, these disputes, you can do these yourself. I will tell you that. Technically, theoretically, you can write these dispute letters to the credit bureaus yourself, but as 60 Minutes found out, it was very, very difficult for an individual to do it because they don't know the proper legal language, they don't know the proper procedure, the proof of identity steps. There's something called dispute codes, what's the right dispute code, et cetera, et cetera. So chances are if you do it yourself on the first dispute letter, you're going to get a letter back that says, yeah, nothing changed. Okay, that is your item, nothing's going to change. So in our case, sometimes when we send our first dispute letter on behalf of a client, it comes back that way as well, but we know how to dig in from there. What we're going to do is we're going to send a second dispute letter, and we are going to ask for proof, for verification of certain aspects of your account or that customer's account on that short sale, on that repossession, on that credit card, on that whatever item that is, and we're going to make that creditor pull that file again, do the research again, and spend the money to respond back to the credit bureaus, all three of them, all over again. If they don't respond, it comes off. If they do respond, we're going to dispute it again and again and again, up to 5 times. So that's what we do on behalf of our clients. And as I said, people can do it on their own, but they typically don't have the time or expertise. So one thing I want to share with you that most people think is that items have to stay on, negative items, whether they're real or in error, have to stay on your credit report for 7 to 10 years. I mean, that's kind of the general thinking of consumers. That's not true. The law doesn't say that. The law says they can't stay on your credit report for any longer than 7 to 10 years. There's a big difference there, isn't there? So the law was passed to help consumers, not help the creditors. The creditors have plenty of help. The law was passed to help the consumers. So what type of derogatory items? I mentioned a little bit that can be removed. Certainly erroneous and obsolete trade lines. We talked a little bit about that. Any trade line not verified by a creditor, and by the way, a trade line is just simply the item on your credit report. A credit card listing, an automobile payment listing, a mortgage listing, those are called trade lines. So late payments, charge-offs, foreclosures, judgments, repossessions, bankruptcies, tax liens, collections, short sales, medical bills, and virtually anything you can think of, cable bills, cell phone bills, any item that's on your credit report can potentially be removed from that credit report depending on what happens with your creditors when they're disputed properly. So why would a creditor not respond? I mean, I get asked that question sometime, and I'm surprised why all people don't ask me that question. I mean, why would a creditor that, in the case of, let's say, a foreclosure, bankruptcy, short sale, repossession, why would a creditor not respond to that? Well, if you think about it logically, haven't they gotten everything out of the consumer that they're going to get? They already got the house back, right? No more money owed. In the case of a bankruptcy, the law says the consumer owes no more money to any of those creditors. In the case of a repossession, they took the car back, or if it's a repossession of a car or whatever item it is. So the creditor just is not going to get any more money out of that. So why would they spend money to continue to report a negative item or respond to the disputes for that consumer? And the answer is logically they wouldn't. They're just throwing good money after bad. So that's why we're seeing bankruptcies come off. We're seeing foreclosures come off. Oh, by the way, in the case of some foreclosures, the bank no longer exists, so they can't even respond to our dispute. The bank was bought by another bank, or they filed bankruptcy themselves 3 years ago, and I mean, there's all kinds of things that's happened in the marketplace. So in some cases, there's no benefit or motivation for the creditor to respond. In other cases, like collection agencies, so if an item's gone to collection, when collection agencies buy an item from a creditor, and then they call that consumer for a little bit, and then they can't get any money, and they sell it to another collection agency who sells it to another collection agency, which, oh, by the way, is the reason why you have duplicates on your credit report. The collection agency, when they buy an account, typically they don't buy all the information. They don't get all the information. They get name, address, phone number, and balance, because all they're trying to do is call and get money out of the consumer. right? Well, they don't have all the documentation of that account from the original creditor, so when we dispute it, they can't even respond to, they don't have the information necessary to respond to our dispute. So that's another reason. And then just simply human error, complacency, or workload. I was talking with somebody about a month ago who works at a collection agency. Their role at that collection agency is to respond to these disputes from the credit bureaus. And he said, you know what? He goes, I got a job there. I got things I got to do. Sometimes I get too busy. You know, sometimes it's late in the day and I just don't feel like it, and it just doesn't get done. So at the end of 30 days, if he hasn't actually pulled that customer file and respond to the dispute, it's done. It gets deleted, and it's just sort of a human error or human element kind of situation. Now, credit repair, again, going back to the research I did with credit repair companies before we got into the credit repair business, I found it to be very, very expensive. I mean, in the thousands of dollars, $1,500, $2,000, $2,500. In fact, just in my world now, in finding out who else out in the marketplace does credit repair, I've seen it as high as $10,000. I mean, it gets crazy. And it doesn't have to be that way. Some companies do charge a monthly fee, so that sounds real good, but they take 18 months, 2 years to fix somebody's credit. Why? Because they want that monthly fee. So it ends up costing them $1,800 or $2,400 because it's usually that fee's around $85, $95, $110 a month. Some companies charge a per item, per credit bureau fee, which sounds good. They'll say, hey, we're not going to charge you anything until we actually remove the items, which sounds great. But they charge a per item per credit bureau. So if someone's got 5 negative items, not negative trade lines, they actually have 15 because there's 3 credit bureaus. And these companies typically, and there's 2 companies here in San Diego that do it, they charge anywhere from $3,500 to $500 per credit line per credit bureau. So what dictates a $35 versus a $500? Yeah, not real sure. But even if they averaged out to somewhere around $50, say, so you've got 15 times $50, it's $750. So it gets expensive. We charge a one-time fee of $499. That includes all 3 credit bureaus. It includes as many negative items as a consumer has. So if they've got 5 or 50, we don't care. We treat it the same way. We price it the same way. And it's for what we call up to 5 rounds of dispute letters, which is about a year's worth of service. So if you're out in the marketplace looking, just know that you absolutely do not have to spend any more than $500 to fix your credit, no matter what some of these companies are telling you. So no matter your financial past, and I know there's some people on this call that have pretty good, a pretty clean credit rating and credit report, and you've done a good job paying your bills, making sure this, making sure that, but every once in a while you miss a payment or a payment is late, not to your own fault. It just happens. You have an automatic debit coming out of a credit card, and you switch credit cards or you switch banks and it doesn't get paid. Well, guess what? It still gets reported as a negative item. 30 days late. Well, that 30 days late can affect you. So some people have had some, just little things. Some people have been through it, though. Look, there's a lot of good, responsible people that have had a tough time over the last 5, 6, 7 years. I mean, I know that because I'm in this business and I know those people. And you know what? Yeah, they lost their home. Right? They lost a job, and they couldn't make the mortgage, and they had to short sale a house, or they had medical bill issues, right? We all know people like that. It doesn't matter your financial past. You can have a promising financial future. So if you'd like more information, you can visit my website at eracreditservices.com. You can email me at dale@eracreditservices.com. You can call me at 619-252-9670. That is a cell phone, so you can text me as well. And I want to turn the call back over to Valarie and thank you once again for having me. And I appreciate your time and the invitation, Valarie. I appreciate everybody's time having come on here today, and I want to wish everybody good luck with finding that new home.
Thank you so much, Dale. This was fantastic, and I know I learned a lot. I was shocked at the 20% error rate because I know my credit or my identity was stolen several years ago, and that was a mess, getting those incorrect things off. And then, there's an error on my credit report right now that I need to fix.
Yeah.
So
yeah, you know, I've talked
we're
to
all
several
susceptible.
people. Yeah, I've talked to several people with the identity theft issue, and that can cost tens of thousands of dollars to fix. It's just a sad situation. So
yeah,
yeah,
it was 9 months of fun, but it's done.
yeah,
So thank you, everybody, for joining the webinar today, and I hope that you found everything as just as informative as I did. And don't forget that next month on the 27th, Shirley will be here, Shirley Guiducci, to share with us the tax information that we need to get through this year's taxes. That'll be, again, will be at 11 a.m., and I hope to see you all there. So everyone have a fantastic rest of your day. Thank you, Dale.
Thank you, Valerie. Take care.
Bye-bye.